Hello friends, welcome to my channel JD's Guidance once again. Friends, this video is about contract costing. And if you have watched my previous video, I have already discussed with you that contract costing is one of the specific order costing. So basically we have got two methods of cost ascertainment. One is the specific order costing, the other one is the continuous operation costing. Now, what is contract costing? In order to know this in details, let's start with an example. So, suppose I have to construct a drain near my house. Then, definitely I will look for a contractor who can take this contract of building a drain near my house. The contractor who does so, this is his business. And once this is his business, his intention is to earn profit. Now, in order to make profit, he definitely has to identify his cost. And once he knows what is his total cost, he will add up the suitable margin and he will then say that this much is his profit out of this business. So, contract costing will help him to identify the cost of his operation. Now, generally the contract lasts for a long number of years, 10-15 years or maybe more than that. So during this time period, a contractor gets his funds locked up. But if he doesn't get the payment before the contract is completed, he will face severe cash crunch. Therefore, under contract costing, there are provisions that the contractor may take cash from time to time from the contractee, and how much money he gets from the contractee will depend on how much proportional work he has completed. So whenever the word contract comes in our mind, we think of two parties. One is the contractor, the other one is the contractee. And contractor does the work based on the order or the specifications as made by the contractee. And therefore, this is a kind of specific order costing. So let's understand the meaning of contract costing very quickly. So it is a specific order costing, as I already told you, because here the contractor will perform based on the specifications as made by the contractee. So I will tell how much should be the length, depth, width of the drain, and according to that the contractor will do his job. Second one is the works to cater to customers' requirements. So obviously a contractor will do things as per the requirements of the customer. Each order is for long duration. As I already told, the contract lasts for long period of time. Examples are construction of roads, bridges, dams, etc. Now let's see what is the features of contract costing. The first one is long duration, as already told. Second one is huge cost outlay. So as you can understand, if it is a construction of road, bridge, drainage, obviously it involves huge expenditure. Always in a contract costing, there is a higher proportion of direct cost. Generally in business, we have two types of cost, direct and indirect cost. Direct cost is something which is directly related to production. Whereas indirect costs are the costs which are not directly related, but they are indirectly related and which helps the production. For example, if I am making plastic bottles, so the direct cost will include the kilograms of plastics, the number of labor who are directly involved in this process, how much kilowatt of power which is used in molding, etc. So these are my direct costs. But this company which produces this bottle do have an office somewhere where there are clerks, assistants and other staffs who are to be paid salaries. There are fans, electricity charges are to be paid, rent has to be paid. These are all indirect expenses because they are not directly helping the bottles to be produced. But in a contract, whatever cost is incurred, they are mainly direct. This is the reason behind this is that in a contract costing or in a contract, the work is done at site. And at site, you will have all the direct things related to production. No fans, no electricity, no office assistant there. Then in a contract costing, there is a crucial role of cost control because the contract lasts for a long period of time and therefore there is a role that there is a role for supervision, monitoring and control. Each contract is independent of one another. If I have taken up a contract for drainage, this contract will definitely be different from the other contract of road construction or even other contract of drain construction. So therefore, each contract is specific, each contract is unique. Works undertaken at site, as already told, this in case of a contract, the work is generally done at site, not at the office. Some more features here. This is very important, so let's understand what it is. Generally, when there is a contract, the contractor has to wait for a long period of time for the contract to be over. But he also has to know what is his profit. So one will argue that only after the contract is completed, one will get to know what is profit. So, but if the contract is for 15-20 years, in my financial accounts, in my balance sheet, in my profit and loss account, should I not show any profit or loss? Then that will be an imbalanced, or it will not be a very stable kind of reporting, because so long the contract is operational, I will not show any profit or loss, but soon the contract is completed, I will show huge profit. So on that particular year, when the contract is completed, when there is a profit, there will be dividends, there will be bonuses. So that kind of reporting or that type of practices is generally uneven and very unsmoothed. So that's why, in order to overcome this problem, there is a provision that contractor can report profits yearly. Now, if the contract is not completed, how do I report my profit? Yes, I can do so. Here we have a concept called notional profit, which I will tell you very shortly. So I can tell some amount of profit, or I can find out some amount of profit based on how much is my completed work. So how much work completed, based on that I will estimate what is my profit. So that is the thing which is written in this point, that based on the stage of completion of the contract, proportional amount of profit and loss is transferred to profit and loss account. Now there are certain concepts that one has to understand before they start solving the problems of contract costing. So first one is work certified. Now the contractor will be requiring money in between. So in between he will take some payments from the contractee. But how much payments the contractor will make to the contractor will depend on how much is the work completed. Now generally, how much is work completed is difficult to estimate. For this, we take the help of an engineer or an architect or a surveyor. He or she will estimate how much is the work completed, and he will certify this, that this much is the work completed for which the payment may be made. So the contractor, or sorry, for the engineer or the surveyor, will make certification that this is that portion of the work completed for which payments may be made. This is known as work certified. Let's see what is written here. Part of the work in progress is certified by architect or engineer for payment. So a contractee will have an architect or engineer appointed for this purpose, and he will certify that this much is eligible for payment. Now, generally, as I already told you, a contractor will receive money in course of the contract. Now, the money that he receives while the contract is operational is known as running payment or progress payment. So, this is what is mentioned here. The amount received by the contractor when the work is in progress is known as progress payment or running payment. But even if the work is certified by the contract or by the engineer, and the amount, whatever amount of work is certified, generally the contractor will not make the whole payment. He will retain with himself also some amount. So this is called retention money. So what is retention money? Retention money is certified value of work completed but retained by the contractee. If you are confused between the progress payment or running payment and retention money, let's understand things in this manner. So work certified is 100. This means 100 value of the work the architect or the engineer has certified for payment, that the contractor may receive this much payment. Out of this 100, the contractor feels that 20 needs to be retained. So he retains 20. That means the balance, that is 80, is been paid. So this is called running payment. I hope things are clear now. Now let's move on. What is work uncertified then? Uncertified means the value of work done but not certified by engineer or surveyor. So engineer and surveyor has not certified that work for payment. So this amount of work is known as work uncertified. So please keep in mind that work certified plus works uncertified makes work in progress. So how much is work in progress is a summation or sum of work certified by the architect plus work uncertified. This constitutes the work in progress. Let's move on. There are some more concepts here. The first one is the notional profit. That a few moments back I already explained you what is notional profit in a very simple manner. Notional profit means as the contract is for a long period of time, even then I have to find out whether I'm making profit or not. I cannot wait till the time the contract is over, then I realize what is my profit. So in between I try to find out what is my profit. That is known as notional profit. So let's see what is notional profit. A reasonable amount of profit is transferred to profit and loss account in order to smoothen the financial reporting of the contractor. As I already told you, if I don't show profit for next 20 years and suddenly I show profit in the 20th year, that is very disturbing and that does not smoothen the reporting practices. Now amount of notional profit to be transferred to profit and loss account. So if I find that yes, there is a notional profit, the practice is again that I should not transfer the whole notional profit to profit and loss account. I will transfer the notional profit to profit and loss account some proportional amount. What is this proportional amount? Proportional amount means depending on my stage of completion, I will transfer the amount of notional profit to profit and loss account. Let's see how much, what is it? So here, if the certified work is 1/4 or greater than 1/4 but less than half of the contract price, amount to be transferred is notional profit into 1/3 into cash received by work certified. So as you do the practicals, you will understand this part that when I get notional profit, the entire notional profit is not transferred to profit and loss account. I transferred a part of it. So how much should I transfer? The first thing that I have to see is how much is the work certified. As I already discussed, work certified is the amount that the contractor is eligible for receiving the payments from the contractee as certified by the engineer. Now you will see how much is the work certified. If we see the work certified is 1/4 or 1/4 or greater than 1/4 but less than half of the contract price, then the amount of notional profit should be transferred is, the amount of notional profit to be transferred is 1/3 into cash received by work certified. This is the formula. Means notional profits 1/3 portion I am transferring, but on top of it I again take the proportional value of cash received to work certified. But if the work certified is more than half but not nearing completion. Now you will ask, what is nearing completion? So generally we take it like this, that if the work certified is between 50 to 90% of the contract price, then the amount of notional profit to be transferred is notional profit into 2/3. This time, earlier it was 1/3, but this time it is 2/3 into cash received by work certified. The next is how much if the contract is almost nearing completion, that is 91% or to 99%. So in this case what we do, we calculate estimated profit if the work completed is almost more than 91 to 99%. In this case we calculate estimated profit. Now, before I explain you what is estimated profit, please keep in mind that when the contract is almost completing, that means now the contractor can tell very clearly what are the other expenditures which will be required in the contract. How much is the expenditure incurred so far and how much more will be incurred in the course of time. He will be very accurately or nearly accurately he will be able to tell. So he will find something called estimated profit. So what is estimated profit? Total contract price minus estimated cost of contract. Now what is estimated cost of contract? Estimated cost of contract means cost to date, means till date how much cost is incurred plus how much additional cost is likely to be incurred. I total these two, I get estimated cost of contract. Now what is estimated profit? So estimated profit is again calculated like this. Estimated profit A proportional amount. Now what is estimated profit again? A proportional amount of the estimated profit is transferred to profit and loss account based on the following formula. So estimated profit into work certified to contract price. So what is estimated profit? I've already told you that estimated profit is the difference between the contract price and estimated cost of contract. And how estimated cost of contract is calculated, I already told you. It is the addition of the cost till date plus how much more cost is likely to be incurred. So I get estimated profit. Now the entire estimated profit will not be transferred to profit and loss account. Rather, again I take a proportion work certified to contract price. But in some cases we use this formula, work certified to contract price into cash received to work certified, or in some cases we take this formula, or in some cases we take this formula. So it is dependent on your choice which formula you use to transfer the proportion of estimated profit to profit and loss account. Generally we follow the B. The second method is widely used. Escalation clause. So generally in some contracts we have the clause that in case the prices of materials and labor increases, then there is a need that the contract price should also increase, because I started the contract 20 years back and in 20 years time the cost of material or labor must have increased. So if I do not adjust the contract price considering the changes in the price, then I will be making some kind of loss. So therefore in some contracts this clause is included that if there is a rise in the price of the material or labor, then the corresponding changes in the contract price is made. This clause is known as escalation clause. So what is escalation clause? Contract price accommodating changes in price of the contract to safeguard the interest of both the parties. Now you will be asking, how can the rise in the contract price be a benefit to the contractee? It may be opposite also. There may be fall in the price also. If the price has fallen, so contractee is unnecessarily paying more price to the contractor. So there may be a condition that if the price falls, then the contract price may be revised. So if this clause is included, then this is known as escalation clause. So generally the changes in price is caused due to changes in price of raw materials, labor, or changes in utilization of factors of production. Now we have three types of contract. The first one is fixed price contract. The second one is fixed price contract subject to escalation clause. And the third one is cost plus contract. Now very quickly let's understand what is fixed price contract. Fixed price contract is the one where the contract price is fixed. There is no chance of accommodating any change, as it is done in the second one, that is fixed price contract subject to escalation clause. Here the fixed price is there, but in case the prices have changed of material and labor, I make suitable changes in the contract price. And the last one is cost plus contract. Cost plus contract means here there is no fixed price. Rather, I estimate the cost and then I add suitable margins or profit margins to decide what is the cost of the contract. So that's all for this video. Please keep watching the other videos. In the other videos, the practicals about contract costing is covered. So this theoretical video is very important, because until and unless you understand the theories in details, solving problems will be a bit difficult. So please subscribe to my channel JD's Guidance and keep watching my videos. Thank you.